Dividend stocks can make you rich. They can help you build a reliable cash income stream from the stock market, one that you can count on to grow steadily over time. The key, of course, is knowing which stocks to buy and when. I was researching on the dividend stocks to buy and want to share with you the top 5 of them that are particularly compelling investments today. And let's get started. Just make sure to like the video and subscribe to the channel. What's up guys, this is Stockspert. On this channel I share with you about investing and finance, so we together invest properly and get more returns. I invite you to check out my other videos about investing for beginners and top picked stocks. I also recommend a 100% commission-free eToro investing platform when you buy stocks and ETFs. Sign up by the link provided in the description. The first stock for today is Microsoft. Microsoft offers dividend investors many ways to profit. Microsoft 365 produces strong recurring revenue and bountiful profits. Microsoft's Azure cloud computing platform, meanwhile, is a powerful growth driver. The Windows, Xbox, and Surface brands give Microsoft shareholders additional ways to win. Moreover, the technology titans' fortress-like balance sheet and incredible cash flow generation allow it to reward investors with share repurchases and a fast-growing dividend. Microsoft's $73 billion in cash reserves and $45 billion in annual free cash flow also help to lessen risk for shareholders, as the company has the financial fortitude to not just survive but thrive during periods of economic uncertainty such as the current crisis. Better still, with its cloud initiatives expanding, Microsoft offers investors the prospect of strong share price appreciation, in addition to its steadily growing dividend with a 1% yield, a potential fortune-building combination. While Microsoft is an excellent dividend growth stock, but you want higher yields, AT&T may be right up for you. The telecom giant's massive 7% dividend yield can deliver a sizable cash income stream to you quarter after quarter, year after year. It's true that AT&T is shedding DirecTV subscribers, but it recently made a wise decision to reduce expensive promotional pricing and focus instead on its less price-sensitive customers, which are actually profitable. This ought to improve its margins, and the cash that AT&T collects from its remaining DirecTV business, as well as the sale of non-core assets, should help it pay down debt and strengthen its balance sheet over time. Moreover, what AT&T loses in DirecTV subscribers, it hopes to gain back with its new HBO Max streaming service. Additionally, AT&T's new 5G network is another exciting growth driver, one that should also help that dividend stalwart further 36-year streak of annual payout increases. The next one is Bank of America. In the midst of a global pandemic and one of the worst economic decline in the past decade, now may not seem like the best time to buy a bank stock. However, at least one legendary investor, fellow by the name of Warren Buffett, is buying Bank of America. And when he buys a stock, investors would be wise to take notice. Buffett's Berkshire Hathaway has purchased more than $1.7 billion worth of Bank of America's shares in recent weeks. The bank stock is now Berkshire's second largest stock after Apple. Its stake in Bank of America is valued at roughly $25 billion. So why is Buffett buying a bank stock in the middle of economic crisis? It likely has something to do with one of the famous quotes, "Be greedy when others are fearful." It's true that the economic fallout related to the COVID-19 crisis will weigh on Bank of America's profit, but its stock price, which is down 30% in 2020 and creates a dividend that is yielding nearly 3%, largely reflects this reality. Buffett in turn is betting an eventual economic recovery, for as Buffett says, never bet against America. Next stock is from utilities sector. Utilities can be a great source of income for investors. Electric utilities in particular tend to enjoy a recurring revenue and relatively stable cash flow, which are well suited to the payment of dividends. And NextEra Energy is one of the largest and best in the business. Its two electric companies, Florida Power and Light and Gulf Power, serve more than 5.5 million customers. But what really puts NextEra Energy in a league of its own is its renewable energy assets. NextEra is the world's largest producer of wind and sun-based renewable energy, as well as a leader in battery storage. Besides helping to battle in climate change, these clean energy assets give NextEra an electricity generation cost advantage over its less forward-thinking rivals. They also help to keep NextEra's dividend on solid ground. The stock currently yields a 2% dividend, and the electric utility leader has increased its dividend for 25 straight years. As the coronavirus pandemic and related social distancing guidelines drive people to spend more time indoors, many are choosing to invest in home improvement projects. And guess what is the next stock? Home Depot, of course, is a major beneficiary of this trend. The retailer posted strong first quarter results. Sales rose 7% to $28 billion, driven by a 7.5% rise in US comparable store sales. Better still, Home Depot's operating and cash flow jumped 22% and 28% respectively to $5.7 billion and $5.2 billion. Home Depot's strong cash generation allowed it to increase its annual cash payout to investors for 11 consecutive years. The home improvement titan recently boosted its quarterly dividend by 10% to $1.5 per share in February, and its stock currently yields a solid 2.3% dividend. So what do you think of this list of dividend stocks? Please comment below. Also, I would love to hear from you if the video was useful and what can be done better. And of course, like, subscribe and hit the bell. Thanks for watching and see you in the next video.